To understand what just happened with silver, we need to step back and look at the full picture, because this isn't just about investment, it's about global strategy, industrial supply, and national security. For years, silver has been undervalued and overlooked despite being essential to the modern world. It powers solar panels that supply clean energy, it's embedded in AI servers that run critical infrastructure, it drives electric vehicles, and it is used in advanced defense systems, from missiles to radar arrays. Unlike gold, which is largely hoarded, silver is consumed. It is melted, incorporated into technology, and in many cases, destroyed permanently. That alone makes it fundamentally different from other commodities. Meanwhile, the market has been dominated by paper. Futures contracts, options, and derivatives claim ownership over silver that doesn't exist physically. Right now, the ratio of paper claims to actual physical silver is roughly 356. One, that S, not speculation, it S leverage. It allows major financial institutions to suppress prices, manipulating the market at will. Every time silver tries to surge, massive short positions appear. Prices crash, investors panic, and the illusion of stability continues. The cycle has persisted for years, but the real problem goes deeper. Silver supply cannot respond quickly to demand. About 71% of silver is mined as a byproduct of copper and zinc. Even if prices spike, production won't immediately rise. There is no emergency button for silver. Meanwhile, demand continues to explode. Every year, solar, electric vehicles, AI, and defense systems consume more silver than is mined. Over the last 5 years, the cumulative deficit has reached 820 million ounces, the equivalent of 10 months of total global silver production entirely consumed. And that number doesn't even include military consumption, which has been deliberately hidden for decades. Agencies like the Department of Defense stopped reporting silver use in 1996. That means every missile, satellite, radar system, or military electronics device using silver over the last 30 years is invisible in public supply demand data. The true deficit could be far higher. Now, consider the global power dynamics. China produces and refines the majority of the world's silver. Recent export restrictions limited foreign access to only a handful of licensed companies. This sudden choke on supply mirrors previous actions China took with rare earths, elevating silver from a common commodity to a strategic resource. For the rest of the world, especially the United States, this is not a minor inconvenience. It's a national security issue. The U.S. government's response is equally strategic. On camera, in front of 50 nations, the vice president announced a plan to enforce tariff-backed price floors for critical minerals, including silver. This means that if any country tries to flood the market with cheap silver to suppress prices, tariffs automatically kick in, protecting domestic industries and investments. This is not theoretical. This is policy backed by authority under Section 232 of U.S. law, which treats critical mineral imports as a national security concern. But the story gets bigger. America is creating a 30-nation trading bloc, guaranteeing access to silver for allied industries, while effectively controlling a significant portion of global supply. Major silver-producing nations like Mexico, Peru, and Australia are potential partners. Once joined, this bloc ensures that the majority of mined silver falls under a system with enforced minimum prices. Anyone outside the bloc, primarily China, faces economic deterrence for trying to manipulate the market. Meanwhile, corporations are stockpiling silver. Project Vault, a $12 billion initiative, combines federal investment with private capital from companies like Google, Boeing, GM, and Stellantis. Google's involvement signals industrial urgency. AI servers require 3 times more silver than traditional servers. These stockpiles guarantee access to physical silver at fixed prices, insulating key industries from global price shocks and supply constraints. This is not a speculative play. It's industrial insurance. The market has already reacted. Over the last 12 months, silver surged from $30 to $120, a nearly 4-fold increase. A single-day crash of 27% erased gains temporarily, but prices quickly rebounded to $90. This volatility highlights one reality. Silver is essential, scarce, and increasingly controlled by both policy and industrial demand. In short, silver is no longer just an investment, it's a battlefield. Global powers are vying to control supply. Short sellers are fighting against the U.S. government. Stockpiles, trading blocks, and tariffs are actively shaping the market. Physical silver is disappearing into industrial and strategic uses faster than anyone can replace it. This is the story behind every ounce you own. The markets are manipulated, supply is scarce, policy is protecting downside, and demand is accelerating. Every element, deficits, trading blocks, tariffs, and industrial stockpiles, interlocks to create a market unlike anything we've ever seen. The next moves won't be gradual, they will be swift and potentially historic. Silver has transformed from a commodity into a strategic asset. Its value is no longer dictated purely by speculation or short-term trading. It is influenced by policy, industrial necessity, and global strategy. The stakes are high, and the rules have changed forever. Here's the moment where everything changes. The market isn't not just shifting, it is being fundamentally rewritten. A price floor for silver alters the rules of the game. Before today, silver's downside was unlimited. Any investor could be wiped out in hours if a flood of cheap imports hit the market or if speculators pushed prices down. Shorts thrived because the system allowed it. China could manipulate supply. The global paper market could dominate the physical market. Crashes of 20-30% in a single day were not only possible, they happened. Investors had no safety net. Now that all changes. The United States has declared that silver cannot fall below a set level. Tariffs automatically kick in if the price tries to dip too low. Trading blocks of allied nations absorb shocks. Mines and stockpiles guarantee supply for industries deemed critical. Physical silver is no longer fully exposed to market whims. It is partially shielded by government policy. Your silver, whether stored in a safe, IRA, or tube, now has a structural downside limit. At the same time, the upside remains uncapped. The factors driving higher prices, industrial demand, technology adoption, energy transition, AI, and defense are unchanged. Consumption continues to outpace production, and supply cannot ramp up quickly enough. That creates a scenario few markets have ever seen. Downside protection enforced by policy, upside driven by real-world physics. Now, consider the paper market. The 356.1 ratio of paper silver to physical silver has been a ticking time bomb. Shorts relied on falling prices to profit. With a price floor, that entire strategy is inverted. Their potential gains are capped, but losses remain unlimited. Any forced covering of shorts could drain physical inventories instantly, causing dramatic upward price moves. The scarcity of real silver intensifies the effect. Registered inventories on COMEX are down 70% since 2020. LBMA stocks are down 40%. Shanghai is at its lowest level since 2015. The market cannot absorb a rush of buying without severe disruptions. The implications go further. The U.S. military and strategic industries consume silver at levels never publicly disclosed for decades. Missiles, satellites, radar systems, and naval electronics destroy silver permanently in each use. That 820 million ounce deficit calculated by public sources already ignores a massive slice of industrial and defense consumption. In reality, the true shortage could be far worse than reported. Combine that with the creation of Project Vault, a $12 billion government-backed stockpile involving Google, Boeing, GM, and other industrial leaders. These corporations are locking in guaranteed access to physical silver at fixed prices, insulated from market volatility. This is not a speculative bet. It's industrial insurance, ensuring production and defense systems continue uninterrupted. The U.S. government has effectively taken a strategic position in silver. By enforcing price floors, creating stockpiles, and coordinating allied nations, it is rewriting the market's structure. Speculators, shorts, and even foreign actors like China now face new risks they cannot fully control. Physical silver is scarce, demand is surging, and the downside is now defended by policy. In short, the market has been permanently altered. The worst-case scenario for silver holders is no longer a free-fall caused by shorts or floods of cheap supply. Meanwhile, real-world factors continue pushing prices higher. Policy protects the floor. Industrial demand drives the ceiling. The environment for silver has never been stronger. Now, pause for a moment and consider this. If silver were just another commodity, why is the U.S. government building a $12 billion stockpile? Why announce tariff-enforced price floors to 50 nations? Why designate it as a critical mineral for national security? These are not speculative moves. They are deliberate, strategic actions signaling one clear message. Silver is essential, scarce, and worth defending at the highest levels. Every ounce you hold, whether in a safe, an IRA, or an industrial stockpile, is now part of a global system. The rules have changed. The risk of a sudden crash caused by speculation or supply shocks has been structurally reduced. The upside, meanwhile, is entirely dictated by real-world demand, industrial, technological, and strategic. So here's the question for you. How do you respond? Do you ignore it, or do you understand that the playing field has fundamentally shifted? This isn't just a market move, it's a geopolitical and industrial game where timing, knowledge, and preparation matter more than ever. I want to hear your thoughts. Comment below. How would you approach silver now? Would you hold, invest, or reassess your position, knowing that government-backed floors and global trading blocks are now in place? Every perspective matters, and engaging in this conversation helps you understand the real story unfolding behind the headlines. Remember, this is not hype. It's policy, strategy, and global positioning. Those who understand it first have the clearest advantage. And here's the loop. If you think silver is just an investment, you're missing the point. This is about national security, industrial supremacy, and global strategy. Supply deficits, strategic stockpiles, tariffs, and trading blocks, all coordinated to ensure silver remains controlled and valued. Every ounce you hold is now part of a larger story. The world's largest economies are actively fighting over it. China restricts exports, the US enforces floors, corporations guarantee supply, short sellers are trapped, and it keeps looping. Each move reinforces the next. Policies strengthen markets, deficits drive demand, physical scarcity pressures, paper claims, and geopolitical tensions ensure volatility, and opportunity remains high. The last decade taught us that markets move fast, but today, silver is moving faster than ever. The question isn't the TS whether it will rise, it ends how high it can go before the next shock. And if you want to be ready, you need to understand the full story, follow the policy shifts, and pay attention to every signal. Because the moment the market truly reacts, the opportunity may not wait.